So should conventional auditors undertake Sharia audit? And I want to address that, and I also want to address some of the points on reporting that occurred to me while I was watching the other presentations. So let's start from the very beginning. The directors are responsible for running the Islamic financial institution, Islamic bank. They're responsible for everything that institution does, and therefore they are the people who are primarily responsible for its Sharia compliance. However, the directors will not be Sharia experts, because it takes enough time just to learn how to be an effective company director, to be an effective banker. They cannot also be Sharia experts. And that's why they hire the external Sharia supervisory board. If they could do it themselves, they wouldn't need a Sharia supervisory board. Conversely, the Sharia supervisory board themselves are not experts on management. What the Sharia supervisory board does is two things. In advance, before transactions take place, they say what will be acceptable, they lay down prospective requirements, they issue fatwa. Afterwards, when the year is finished, the Sharia Supervisory Board is itself responsible for reporting to all external stakeholders, shareholders, customers, regulators, that the institution has complied with Sharia. That's a statement of fact. It's not a statement about what should have been happening in the future. It is their opinion at the end of the year it has complied with Sharia. It's not a guarantee, but it's their opinion that it has complied with Sharia. The problem is that the Sharia Supervisory Board does not have the skills or the available time and resources to audit what the Islamic bank has done during the year, in most cases. There are some cases where it might. If you look at some of the smaller Islamic investment banks in London, they do a very small number of transactions during the year. The Sharia Supervisory Board may well be in a position to investigate those transactions. But it's not enough to say we issued a fatwa for transactions 1 to 5, we've only done 5 transactions, therefore we must be okay. The fatwa says what the company should have done. Auditing is about finding out what the company actually did. And I do not believe that the Sharia Supervisory Board, in most cases, will have the skills to do that. And therefore, somebody else has to do it. I believe it's inappropriate to rely upon internal Sharia expert employees, because most Islamic banks will have an internal Sharia department, but they are under the control of management. They are not independent. In the same way that internal audit is ultimately under the control of management. It isn't independent. And this is where external auditors come in. External auditors, and I'm talking here about firms like PwC, KPMG, Deloitte, Ernst & Young, they understand a bit about Islamic banking. Neil's part of KPMG, so I'm sure that KPMG understands something about Islamic banking, but they are not experts in Sharia, but they don't need to be. What they are experts in is assessing internal control. So is this an organization that is generally likely to comply with the rules set by senior management, or is it an organization where the branches are out of control and do their own thing? That is the kind of expertise that external auditors possess. They can assess the extent to which the internal Sharia function has a reasonable degree of autonomy and independence. Does it report to local management or does it report to top management? Because that makes a big difference. The internal Sharia function in a branch, provided it reports to top management, can be relied upon to keep some kind of control over what local branch management does. And so my view is that the recommended model for Sharia audit is that external auditors should carry out Sharia audit based upon detailed guidance from the Sharia Supervisory Board. Because the Sharia Supervisory Board needs to say to the external auditors, these are the sensitive issues, this is what we want assurance on. Because the related issue is, how do you report? And I saw in Malaysia that the external auditors are supposed to give their opinion that the institution is in compliance with established Sharia standards. I'm sceptical about that. I believe that the only party that should report to external stakeholders is the Shari'ah Supervisory Board. I do not believe that PwC or KPMG should be issuing an external Shari'ah opinion. What they should do is do the work after planning ahead with the Shari'ah Supervisory Board, report back to the Shari'ah Supervisory Board that we have investigated what has happened in the organisation. We are satisfied that these ground rules that you set have been complied with 98% confidence. We found no exceptions. It is then up to the Shari'ah Supervisory Board to rely upon that legwork and issue its own opinion to the outside world. I said I don't believe that the external auditors themselves should be issuing Shari'ah opinions, because the opinion isn't. The Shari'ah Supervisory Board themselves are entitled to have an opinion about Shari'ah. And so the opinion to the world is you know what we, the Shari'ah Supervisory Board, feel about Shari'ah, because we're expert scholars, these are our credentials. We believe this organisation has complied with Shari'ah as we understand Shari'ah. That is different from Ernst & Young saying that we think this organisation has complied with Shari'ah either as Ernst & Young understands Shari'ah or as established Shari'ah sort of principles, whatever they are, because nobody knows what they are. That's all I want to say in the prepared remarks. I'm happy to get involved with the Q&A.
But thanks. I'm sure we're going to get a lively debate on that. Thanks very much.